Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me, Sonal Bhutra, and these are the top stories at 1:30 p.m. Indices hold gains, continue to outperform global equities. Metals and banks lead the gains. Midcaps underperform. All sectoral indices currently trade in the green.
M&M Financial surges after its business update for the first quarter. Disbursals so far in 2022 on a year-on-year basis rise, and that is something that is propelling the stock higher.
Cochin Shipyard tells CNBC TV18 that an official decision on building another aircraft carrier has not been made yet. This is after the Made in India commissioned India's first indigenously designed and built aircraft carrier, INS Vikrant, at Cochin Shipyard in Kochi.
Ramakrishna forging gains after management tells CNBC TV18 it expects 15 to 20% revenue growth in FY23 and up to 950 crore worth of order wins. All right, those are the headlines that we are tracking at this point in time. But markets, they continue to surge, and what a stellar rally. The Nifty is up 110 points. Midcap index up another 108 points. That's a 0.3% gain. Yes, they have come off slightly, but they have remained in the green through the course of the day. And the Bank Nifty is the one which is propelling these gains. So that one is up around 380 points. And, you know, Reema, we were discussing it in the morning as well, that despite the weakness that we've seen in the global markets, today has turned out to be a good day for us. And as you pointed out, that despite no big domestic cues this time around, we are continuing to be in the green.
Indeed. So, year to date, we're up 1.7%, while the rest of the Asian markets are down anywhere between 15 to 20%. So the streak of outperformance continues even today. But let's invite Himanshu Gupta of Globe Capital now to get in a check on the market technicals. Do we have Himanshu with us? Okay, Himanshu, hi, afternoon. What have you made of today's outperformance? Is this backed by very large volume? What explains the fact that India continues to be resilient technically, while the rest of Asia struggles?
Hi, good afternoon to you. Well, I think it's been only the broader markets that actually continues to look very, very strong as far as we speak about the Indian markets. And today the breakout is actually led by the Nifty Bank, which has actually managed to give a breakout above that 39,700 kind of resistance zone, around which we were witnessing a kind of supply zone. And I think this is the reason why a follow-up buying is being witnessed particularly in the financials. But to be very clear about it, Nifty still continues to be in a broader range. And as long as we are not able to break out that above that 17,750, 17,800 zone, Nifty continues to struggle in the consolidation band of 17,500 and 17,700. And on Bank Nifty, we need to see that if we are able to manage to see the closing above this 39,700 odd levels. In case we do, we can see some kind of further short covering, as today the rally is actually led by a very strong OI addition in the Nifty Bank also. But coming to your question, I think it's the broader markets, the strong rally in the small and mid-cap stocks, that's actually very, very nice to see. And I think there are very good opportunities to make money.
Okay, and what would your individual technical bets be, or those opportunities be?
Yeah, so I'm going with a couple of buy recommendations. The first one is a buy on Chola Finance, Chola Investment. That stock is looking great to me on F&O segment. The data and the chart structure are both positive, so one can initiate long positions here around current levels of 800 odd levels, place a stop loss below 785, and the targets 820, 825 can be seen in a very short term. The next one is a buy on the cash segment stocks. The first one is Engineers India Limited, EIL. That stock has given a very strong breakout backed by very strong volumes from a downward sloping trend line on the daily charts. And I think there is much more follow-up which is likely to be seen over the coming days. So the EIL is a buy for a target price of 80 and a stop loss below 67 can be placed here. And finally, a buy on Century Textiles. This is another stock where we have seen a start of maybe a new uptrend. After a brief consolidation, the stock has given a breakout in today's session. And interestingly, the move is yet to happen here. The risk reward is extremely positive. Keep a stop loss below 860 and targets of 940, 950 can be seen in the immediate short term.
Thank you very much for joining in. Let's move on to our segment, Midcap Movers. Sonia is joining us to take us through the mid-caps and small caps that are moving around in trade. Sonia?
Well, thanks a lot for that. So I'm going to begin with some of the laggards, because today definitely belongs to the laggards. There's a big surge that we're seeing there. whether it's Exide, Amara Raja. And remember, these are stocks that are down 40% in the last 1 year, and they're rallying today. Orient, Green Power, Vodafone Idea, Bajaj, Hindustan, the biggest losers of the year, are all rallying today. Apart from that, fresh 52-week highs for names like Federal Bank, Ashok Leyland, M&M Financial post that robust report that they came out with, Indian Hotels as well as Mahindra Holidays. So this entire tourism piece is working quite well. Auto ancillaries continue to be charging ahead. Shanti Gears, the stock that we had covered on Midcap Radar a while back, is not only at a fresh 52-week high, but up 10% today. Rico Auto, Tube Investments, Gabriel India are all charging ahead this afternoon. On the losing end, though, you have some profit taking in ABB India. Z Media is down about 3.5%. GE Shipping and Gland Pharma are down about 3 to 5%. Back to you. Okay, all right. Sonia, thank you so much for joining us with that list of stocks moving around in trade today. Earlier today, we caught up with Mahesh Nandurkar, who is India strategist at Jefferies, and he says momentum in favor of India has moved in, but valuations are uncomfortable. Listen in.
From a medium-term perspective, from a 6-month, 12-month perspective, I would still reiterate my, cautious view here because, while the corporate earnings are doing reasonably well, the economy is doing fundamentally well, but I think we need to differentiate between market movement and the economic fundamentals. These two are broadly correlated most of the times, but not all the times. And especially with what is happening globally, especially in the US in terms of the rates going up, the Fed balance sheet shrinking, etc., the dollar strengthening. All those things are definitely, not very supportive from the valuation standpoint. So I would still maintain my cautious view here. I think domestic consumption, looks like a pretty strong story to me. Staples, while it still has some issues, pertaining to the rural demand, which hasn't really, picked up as well as the urban demand has. And there are some cost pressures there, etc. But I feel that it's a good defensive bet to take in the environment. Especially if you think the markets are going to be stable to maybe even downward moving. I think staples makes a lot of sense according to me, and so does these urban consumption stories as well. Like hotels and autos. So I think that's clearly a strong overweight for us. The capital goods sector in general shows pretty strong promise, I would say. And while we might still be away from away by a few quarters from the broad-based capex cycle recovery, etc., but there are many segments like you mentioned, defense. Then there is industry automation. And then there are some ESG-related capex plays. So I would say that many of these companies have also been reporting good numbers. In fact, in the latest quarterly result season, some of these capital goods companies actually stood out as very few exceptions where we saw earnings upgrades, while most of the other segments of the market saw downgrades. So I would say selective picks in the capital goods sector is still the right strategy in my view.
Okay, all right. With that, we'll slip into a break now. On the other side, Dhaval Ajmera, the director of Ajmera Realty and Infra, will join us to discuss in detail the business updates and the... Hi, welcome back. You're still tuned into Midcap Radar on CNBC TV 18. Well, let's talk about the real estate space now and talk about Ajmera Realty. The stock is doing well today in trade, but the stock has declined 20% in last 1 year itself and has underperformed Nifty Realty as well. Their Q1 update was really strong. So just to understand what the business outlook is like, we have Mr. Dhaval Ajmera, the director of the company, joining us now. Dhaval, good afternoon. Thanks a lot for joining us. Well, Q1 update was really strong for you. You're sitting on a base of 400 crore rupees in terms of quarterly bookings. Collections were up, coming in at 210 crore rupees. How has Q2 panned out so far for yourself and say the industry as well? Because of the rate hikes that we are talking about, more are expected. Are you seeing any dip in demand, or will you continue with this strong momentum that you saw?
Hi. Q1 was absolutely a great momentum and run for us, primarily because we had a great launch of our project at Wadala, Ajmera, Manhattan. Going forward, in the next few quarters, we are seeing sustained growth. Obviously, it can't be as great as what we saw the first quarter, but because that was primarily because of our great launch. But overall, we are seeing, good numbers coming. Well, the demand has been pretty strong. We are seeing sustained demand coming in all these projects, and overall the sales are looking good. So yes, it will be a good number, but obviously we can't compare it to a quarter one because that was a jump due to great sales.
Okay, so the
Great
Q1 run
launch,
rate
actually.
is not sustainable. How much of this Ajmera Vadala project have you sold already, or pre-sold as it's called? And do you have any other launches in FY23 which can give you that bumper boost to sales?
We are looking at the Vadala sales is been overall the total Ajmera Manhattan is about 1,500 crores of top line, from which we have done overall about 20-25% of pre-sales right now, and we are looking at good numbers coming in the next few quarters as well. Going forward, we have a few launches coming up that is in pipeline, where we recently acquired our Ghatkopar land, which will also come up for sales in this probably financial year. And other projects is the Juhu one, which we have just started the construction, and we should be able to launch very soon. So overall, we are looking at few projects which will be under sales and announcements, and obviously that will give us a good number. Obviously, we are looking at. Sorry.
In FY23, what are the launches?
So we in FY23 we are looking at 3 to 4 launches still, two being at Ghatkopar and one at Juhu.
Okay, so Dhaval, you said that 20 to 25% of project, that is Manhattan project, has been sold. Do you not expect that to continue in, say, next few quarters as well? And that is something which could make the quarterly run rate stable for you, say around 300 crore rupees, if not anything else. And in that scenario, what would your FY23 overall booking growth look like?
Well, see, we are definitely looking at a bigger number from what we did the entire last year. So definitely our target is 1.5 to 2x from what we did last year. Now, having said that, we have got almost 50% of what we, or almost what we achieved in the entire last year in the first quarter. But going forward in the next 3 quarters, we are trying to, match up at least to 1.5 to 2x of to FY21-22. So that's where we are looking at a better number coming in, and looking at a number which will be double, almost double to what we did last year.
Will it be price-led or volume-led? If you can give us a sense of what kind of price hikes have you taken already? If you're talking about doubling booking value, how much will it be driven by volumes as well for you, since you just said 3 to 4 launches are expected this year itself?
So it is going to be both. Some places some places the price, in our current projects, we have managed to, look at wherever we could hike up the price, we have hiked up the price. And new prices have been launched at a rate which is sustainable through the entire, cycle. And people are looking at those kind of prices, which is acceptable. So we have to look at volumes and we have to look at price both. So primarily for us is the overall value of the the turnover matters, and the sales volume which matters. So we are looking at those kind of projects. So overall, I feel we will have area wise we will sell more, and at the same time we will have a greater volume.
Naval, I want to come back to that point. Why do you not think the sales value of 400 crore is sustainable? Because you still have 75 to 80% of the Ajmera Manhattan Vadala project to be sold. Plus, you've got 3 launches lined up in FY23. 2 of them in Ghatkopar, 1 in Juhu. So if in Q1 you got the benefit of 1 launch and you could do 400 crores, considering you have so much of unsold inventory in the Vadala and launches coming up, why do you think a 400 crore revenue run rate is not sustainable, this at least for FY23, for the remaining 3 quarters?
See, so every quarter doing a 400 crore revenue from a project, because this was a hike and a jump which we got from a one particular launch that was at Vadala, and obviously that was our marquee project, and we have a greater volume. Whereas if I have to look at a Ghatkopar launch, our total top line is about 250 crores. Our Juhu top line is 150 crores. So if I have to look at the volumes as compared to Vadala, which was 1500 crores versus 250 and 150 crores. So the volumes is not that which will give me a sustenance growth, and we don't expect it to also happen because real estate is a very cyclical market. Sometimes when we did a great launch and we have a greater volume to sell, you do a better number. But every quarter or every year, I would not be able to practically launch that kind of projects. Otherwise, it's a market supply, demand supply situation. If I launch more projects, probably the area should also have that kind of demand. So we need to balance it out completely to see to it that we sustainably grow, at the same time have a better number and a volume. So that's how we are managing and balancing it.
Understood. So in that case, with the new launches, with the projects that you have in pipeline, what would your debt figure look like? It saw a decline of 25 crores on a quarter-on-quarter basis, but still the last known figure was around 800 crore rupees. What is the debt outlook looking like for the rest of the year?
So debt would almost be remaining more or less here and there, but our main focus is, to probably, even if we take debt, it will be a project-based debt, because we need to pay to immediately for the premiums and, so that we can register the project and sell it. So that kind of debts only come on project to project basis. So even if we increase, let's say if I'm taking the Ghatkopar project, probably there will be an incremental in debt, but that will be, restricted to that very particular project, which will be paid or repaid from that very project itself. So we are not too worried on debt because, overall we are seeing a great sales revenue coming in the next 3 to 4 years, which will take care of the debt. So we are not too worried because these debts are project basis.
Let me come back to the Vadala project, since that's the big one. 1500 crore is the total size. Of that, 75% is still unsold. So we're looking at a number of 1100 to 1200 crore of inventory that you will be sitting on over the next, a couple of quarters as the project approaches completion. There is a lot of talk of oversupply on the eastern side, this Vadala, Parel, etc. region. So how confident are you about being able to sell the balance volume in Vadala, and how many years do you think it will take for you to realize this balance amount of 1100, 1200 crores?
See, this project is a 40-story, 45-story, tower, which, today currently we are under basement level. And we have, Vadala as a micro market has been developed and established really great because of its connectivity to the entire city of Bombay. And, I personally believe that people at large today want to look at open spaces more than having at a single building project. So with the Vadala, when we have a 100-acre parcel, a great openness coming in, the preference of buyers come to such projects. And that is where we are seeing such kind of, sustained sales momentum also happening month on month. So going forward also, we see that today, we will be able to finish this project in terms of construction in the next 3 to 4 years' time. So we still have a longer way to go with, 25% of sales already done. Just by the first quarter, we are looking at, good numbers coming at least in the next 1.5, 2 years. We should be able to sell about 60 to 70% of the project, and then it will sustainably go on till the end. By then, we will launch another tower, which will take care of our volumes and sales going forward.
Okay. All right, Dhaval, it was a pleasure speaking with you. Thank you so much for joining us and taking us all through all those details. Well, that's the word coming in from Ajmera Realty. But for now, we'll step into a break now. But before we do that, a quick reminder for our viewers. It's that time of the year again. Money Control Pro's Financial Freedom offer is back with added benefits. Get a Money Control Pro subscription at net zero cost by claiming exciting offers worth 1500 rupees from our partner brands. Grab the benefits now only on the Money Control app or the website.
Welcome back. Gabriel India is in focus. The stock has hit a fresh 52-week high. It's up 20% so far this year. Sonia is joining us once again to tell us more about this buzzing stock. Sonia?
So, on my profile today is Gabriel India because not only has the stock hit a 52-week high and it's up 20%, as you said, this is a company that manufactures ride control products. So, all your shock absorbers, front forks, etc. And it has a 30% market share in the two-wheeler and three-wheeler space. It has supplied to a lot of the new launches in the 2- and 3-wheeler space, and hence the stock is in focus. Its top 3 customers are TVS Motor, Yamaha and Bajaj Auto. And as we know, stocks like TVS Motor are sitting at fresh 52-week highs. Now, it supplied ride control products to recent launches like the TVS Raider, the Jupiter 125cc, the Bajaj Auto CNG variant, the R107, And it has a lot of electric vehicle customers as well, whether it's the Ola Electric, Ampere, Ather, or even Okinawa. Now, even in future, it has projects like the two-wheeler Okinawa. It has in the three-wheeler space more orders coming in from Bajaj, M&M, Tube Investments, as well as Hero Cycles. And all of this is reflecting in the earnings of the company as well. In the quarter gone by, the revenues went up 60% on a year-on-year basis. The EBITDA was up 121%, of course, on the back of a low base. And the profit before tax was up 178% on a year-on-year basis. Not just that, the balance sheet of the company is also quite strong. The net cash is at around 262 odd crores. And if you look at a revenue trend over the last 6 years, in FY16, the company used to make revenues of anywhere between 1400 to 1500 crores. And now in FY22, the revenues have surged all the way to 2300 crores. So definitely benefiting from the big revival that we've seen in the auto segment. Hence, Gabriel India is on my radar today.
Okay, all right, Sonia. So that's about a mid-cap stock, which is at a 52-week high. For now, the markets are doing well, but we have run out of time on this edition of Mid-Cap Radar. Stay tuned. Inside Out when we return.